is really, really important. And we're bringing to the stage now someone who is responsible for making sure that they are keeping insurance operators honest, but also creating an environment where they can thrive and grow and innovate. So please now we welcome Clement Cheung, the Chief Executive Officer of the Insurance Authority of Hong Kong. Clement, please. Go get him.
Hi, everybody. The clock is ticking. I didn't actually make an entry as thunderous as Eddie Yu. Believe me, I would love to, but I don't think we can afford it yet. Now, so our colleagues told me that I have to charm you with my looks. Now, judging from the string of the laughter, I don't think that will work very well. But anyway, I believe what I should do is to make you believe that I will speak better than I look. I think I can do that. So let's begin. First, last year, how many of you remember what the theme was last year? I bet not many, but last year's is pushing boundaries, reaping benefits. What did I talk about last year? I talked about Open API, I talked about green and sustainable finance, I talked about something that some don't want to hear, which is cyber resilience. We talked about the CRAF, the assessment framework. So naturally, I need to give you an update so that there's some continuity. But at the same time, this year's theme is about fintech redefined. So how do we redefine it? We were struggling a little bit about what we should be doing. And then, just to make things simple, our philosophy today is not to tell you what we want to tell, but we want to tell you what you want to hear. So, which is in fact not usually what I did in government. But anyway, so what we need to do is to bring some of the stuff that we see and do down, back to the community, back on the ground, so to speak. And then, in order to connect to you, try to figure out what is the business opportunities. Because after all, people here are trying to make a contribution while making a living. So that's how we're going to structure the presentation. At least that's how we try. Now, on the first slide, we did this as a covering because all regulators have only one core mission, which is to narrow protection gap and to enhance financial inclusion. That's virtually runs through everybody, every supervisor's mandate. So how do we do that? In terms of protection gap, there is a wide variety of stuff. People in insurance will know every single risk has a gap. That's how we exist. But recently in Basel, when we have a group of global regulators, we have a debate. So in the end, I think I remember I said that in order to make sure that we filter the right kind of risk, why don't we have some criteria? And I suggest that we should do two criteria, which is universal and imminent. Now, universal means that it affects everybody. For example, if you take retirement protection gap, depending on demographics, depending on cultural consideration, and consider the government participation in the pension system, protection gap in terms of retirement planning might not affect everybody the same. But we realize that climate and cyber does affect everybody, and it's imminent. It has to be addressed. Of course, I myself feel that it's good because it's you and I. So it's a little bit of a gag, but it's a good gag. Now, so in the slides, we're going to tell you how this widening protection gap is going to affect and aggravated by GDP growth, and therefore creating a poor resilience and poor coverage, which I think the insurance industry can reap benefit from. So in terms of how the contribution by Hong Kong can be gauged, I believe that what we are here for is to produce innovative products and pragmatic risk management solutions. In order to support that, we will give you two particular areas. One is actually technological advancement, but being Hong Kong at this present stage, we're very focused on Web3, so we believe that Web3 In effect, it means decentralized computing, in fact, has a role to play. As you can see, we're going to address cross-sector, cross-boundary connections in terms of data, in terms of expertise, and those, I think, will be supported by Web3. And finally, we'll talk a little bit about how IOS, the insurance-linked securities, could actually thrive in Hong Kong as an instrument to address climate risk. Now, moving on to the next slide, I think you guys will love this slide, because this slide basically tells you threat and opportunities. On the right side, basically opportunities. I can't see the numbers, but I can remember it. It's actually 15 to 50. In the current year, the cyber insurance premium is around 15.6 billion. In about 7 years, in 2030, it's going to grow to over $52 billion. That's 7 years, and if you look at it, it's a compound growth rate of about 20%. So no matter what you look at it, this is a very impressive growth, and this market cannot be missed. On the left side, you have seen these figures before last year. Basically, it tells you the kind of damage and the focus of that damage. Basically, it's affecting Hong Kong. There's a growing concern about number of incidents. And look at the bottom right corner, a large share of that is being borne by the financial sector. But to add on one figure before I close this, in fact, I took a look at the internet. For the same year, globally, Swiss Re estimated that cybercrime damage, $1 trillion. You are talking about $945 billion, $1 billion, in fact, in the global world. And the protection gap of that, if you remember the umbrella slide, 90%. So 90% of those losses are not covered. So you can imagine the kind of business opportunity that it can provide you. And to add on to that, Asia Pacific is actually the area where the biggest share of that growth is going to be found. On the next slide, I'm going to give you a little bit of the way we reacted. So the insurance industry is not actually ignorant to that fact. So we have actually been responding. Two kinds of response. We are seeing coverage response. We are seeing the kind of service we provide in terms of coverage. We're seeing a shift from first-party damage coverage to third-party liability. I won't repeat some of these on there, but in terms of third-party liability, we're moving on to virtual assets, e-wallets. We are even covering, for some cases, public liability risk as well as litigation cost. Now, but that's basically still a post-event coverage. On the right side, you can see that some insurers are moving smartly into different things. They are now increasingly investing in their internal capacity to try to do threat monitoring, incident responses, stuff like that on the right side. Essentially, what they do is to shift from curative to preventive. They're shifting from retrospective to prospective, and the most importantly, they're switching a payer, which is a client, into a partner. So this is something which I believe is important, and it is something which, again, spells tremendous business prospects. Now, this slide is the update. Last year, we talked about CREF, scale off quite a few people. We did tell them that we did tell you that we're going to do a survey and we're going to size up the situation and figure out what we do. The left slide will tell you that, in fact, that survey indicated that we're not that bad. 25% are high risk. Most of the people are in the middle tier. So, but those need to be assisted. We are moving on in 2024 into a review of the current guidelines. And in that context, we're going to do the 3 steps: assess risk, then we do the maturity assessment, measure the gap, and try to deliver help. On the right side, in terms of help, we're collaborating with the government, the Financial Services and Treasury Bureau to try to introduce new competency framework. We're also going to run a cyber-related workshop on intel, on skills as to how we cope with potential crisis situation, and most importantly, cyber security measures. Now, for you, that 70% on the left, and those workshops on the right needs support. And this is areas where some of you may wish to take a closer look at. So that update actually also connects with business. Now, I move on to this topic. I wrapped up cybersecurity. I'm now move on to climate. Now, in terms of climate, I think I need to move back to the former slide. In fact, the slides are slightly different. But anyway, climate risk is a global menace. I have to move on to the next slide. You can see this particular slide. This slide basically tells you the spread of major cat events in year 2022. All you can see is that it's all over the place. Everybody get a share. So remember what I said about you and I? This is you and I. Now, if you want me to refresh your memories, basically you have the Gabrielle cyclone in New Zealand. You have earthquake in Turkey, Syria. You have earthquake also in Morocco. You have bushfire, huge one in Canada and Hawaii. And you have rainstorm and flooding in northeast China. And for those who are more interested to close at home, I believe that most of you got pretty wet in one particular weekend in September when we had black rainstorm for 16 hours. So it affects everybody. Now, so when I say it affects everybody, how does it actually affect Asia in particular? If you look at it, at this slide, we tell you that Asia is on top in terms of GDP growth on the left. But Asia, if you look at the right side on the bottom right, Asia actually fared worse in terms of protection gap. Look at the orange part of the bar that you see on the right. So the purple line graphs show that we're doing well in growth. The right side, the orange bar, telling you we are pretty appalling in terms of protecting ourselves. In fact, the protection gap in Asia, depending on the mix of cat events on the individual year, could be as big as 90%. So this is where the insurance industry can do more. Next slide, I'm going to tell you about ASEAN. So it's even more granular. You look at this graph, what I'm trying to tell you is that the bar, the blue bar, basically is GDP per capita. The orange line is actually the insurance penetration, and the green line is GDP trend growth. So the message here is insurance penetration drops together with GDP per capita, which is logical because it reflects the level of development. But the trouble is GDP growth is on the reverse. So remember what I said, the faster you grow, the less developed you are, the bigger the gap is going to cause even more serious problems. Now, from then on, we move on to iOS. I talked to you about how we're going to cite the case of Hong Kong to try to help. Now, iOS is a kind of insurance-linked security, is a kind of capital instrument. Basically, it's using the capital market to provide additional reinsurance capability, basically sharing risk. Now, unfortunately, from the earlier slide, you can see the protection gap is greater in Asia, and protection gap actually is greatest in the Asian countries where the level of development is lowest. But yet, if you look at the global major iOS issuances, where do they come from? Developed country. Now, in fact, if you relate back to the previous slide, that's the reason why the protection gap in developed countries are less, because they actually utilize instruments like this a lot better than we do. So how could Hong Kong help? So we didn't actually do. On the next slide, I'm going to tell us that what we do is that the insurance industry can do a lot of things. I won't repeat some of the slides here because of the of time, but in terms of Hong Kong's capability, we believe that we have everything that makes us an iOS hub. On the right side, you see things which can't be replicated. On the left side, you have factors that you can actually manufacture. On the left side, you're talking about risk pool. Now, we don't have a large risk pool, but if you look at the GBA, it's Hong Kong times 8 times. If you look at mainland China, it's Hong Kong times 800 times. So we have a huge risk pool waiting for us to serve. And secondly, we have the, well, by far, I believe, the most active, vibrant, and deep capital market. These are factors that can't be replicated. On the left side, we're seeing things that we are already doing, like government support, financial infrastructure, but we're lacking on 3, namely talents, data, and modeling. Now, I highlight the last two because the last two has a connection with tech. Modeling needs computer power and finesse, and the data needs to be mined and analyzed. Now, this is something which we need to work on. It's a bit of a climate tech, green tech, but ultimately, remember, they have to go to capital market. And therefore, after all, there's going to be green finance tech, green tech plus fintech. So this is something which, again, I wish you to bear in mind. And this is something which we are going to have a lot of development. We're going to source new sponsors. We're going to educate investors about the risks inherent in this region. We're going to enrich product structure. We're going to diversify in geographical region. We've got 4 issuance, basically focused on mainland, Japan, and Chile. We want more of that. Now, with that, I will update you on I have only 2 minutes, so I'll update you on what we have done. Last year, we promised we're going to do the Open API. We've done it. We've issued the Open API framework. We've set up with the Science Park a portal for you guys to upload use cases to share. For those who haven't shared and want to do so, please add to the party. Those who haven't actually been visiting this particular portal, do so, because this portal will enable you to source and potentially build up partnerships. Now, in terms of federated learning, we are in good progress. We are hoping to be able to publish a result within 2024. In case you don't know what federation learning is, I learned it through the internet in 5 minutes. Basically, it's decentralized iterative machine learning. So this is something we believe is going to bypass a lot of privacy concerns, bypass a lot of what we call gaps. And this kind of iterative learning is very powerful, and look forward to what we publish next year. And finally, we are pursuing aggressively on cross-boundary collaboration. Remember, cross-boundary doesn't mean physical boundary. We are talking about sectoral boundary. So we are collaboration very much with the banking sector. You can see that Open API actually also piggyback on what has been done by banks. We are now really, really active in pursuing the joint usage of the CDI, the commercial data interchange, which provides a lot more data in a much richer format for our insurers to exploit. And finally, we are now talking to one Hong Kong university with a view to setting up a GBA climate data portal. Now, this is something which transcends sector. We're talking about potential risk pool covering 11 cities. Now, I can't promise that it's going to be easy, but this is something which I believe will benefit everybody, because if you look at climate risk, as I said, it's a you and I. At the same time, larger pool of risk means better pricing and better predictability. So watch this space. We're going to continue with that. Final slide. I'm overrun slightly, but bear with me. Last year, we concluded with a Star Wars Lambda T4 passenger shuttle. We did that because I thought it's for peace, and secondly, we have 3 touch points. So that particular spacecraft just happened to have 3 touch points. But this year, I believe we are on the aggressive. We should do a bit more. So this is the X-Wing Starfighter, the ride of Luke Skywalker. So we've got 4 touch points. The touch points that you need to focus on, because the other 3 we said about last year. The last one, bottom left, cross-sector collaboration. This is what I talked about just before this slide. Watch this space. This is something which we believe is very powerful. And I will conclude with what this means. Last year, I said that for regulators, they're supposed not to be rebels. So we shouldn't be riding on a Star Wars rebel spacecraft. But then we believe that regulators should be rebellious at heart. We should not be settled for what we are doing. We should be adventurous. But at the same time, when we're adventurous, we need to be cautiously courageous. So we need to put up courage for change, but we can't change for change. We have to know why we change. And finally, with all these things that we do, we have to remember one thing, that ultimately what we need to do is to deliver care for the society. So we do good, we make you do business, and we continue on this journey of reform, and I hope to see you in the same shape in much better energy next year, and I hope you do agree that I speak better than I look. Thank you very much.
Great job, Clement. Thank you very much. I bet you didn't expect the Chief Executive Officer of the insurance story to be dropping Star Wars references into his speech. Thank you so much, Clement. Great job. We are going to bring somebody now from an organization, the Bank of International Settlements. It is an organization composed